Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be giving a quick market update, talking about some of the key themes that are going to be in play this week and having a look at the calendar and what some of the risk events this week coming up are going to be. So let's jump straight into a market update. Pretty much the main thing you've got to note this morning is we've had a big data dump out of China and the data was much worse than expected, and markets are moving as a result. I'll show you the charts in a minute and how markets are responding, but first let's just quickly do like an overview of this data because it was pretty ugly. The most important number you got to know is this industrial production year over year, only 3.8% up on the in July, much lower than the expected 4.6%. But retail sales as well, a sign of consumer weakness, also bad, 2.7% year-on-year growth in July. That was way below the expected 5% year-on-year rate of growth. And then as you can see, like fixed asset investment, not as good as expected. And although you can see here the Chinese unemployment rate was a little bit better than expected, you also saw the youth unemployment rate rising to something ridiculous. And in a response to this data, we've also seen the People's Bank of China, which is their central bank, cutting interest rates. But rather than lifting sentiment, this appears to have sort of made things worse because it's sort of maybe sent a signal that the authorities over there are actually quite concerned, because it wasn't expected that they were going to do this rate cut, and the PBOC tends to be quite predictable, quite steady, so it seems to have unnerved markets. So I've got the dollar index here. This is the first chart I'll show you, and actually no, that's the incorrect one. Let me bring up the up-to-date chart. Here we go. You can see that the dollar is rallying. Okay, we're now up about how much are we? Yeah, about 1.5% from last week's lows. Pretty much back in line to where we were before we had that softer than expected US inflation data last week. So it looks like we are going to challenge 106. Let me also show you oil. Oil's been very, very focused recently on weakness in global growth. And this data out of China very much strengthens that narrative that the global economy is slowing down or heading for recession. So demand concerns battering oil this morning. You can see it's $4.50 down already. It's probing these lows here from August. And, you know, a lot of people think, I certainly think, that oil could be testing that $85 per barrel mark in the near future. Let me show you some other asset classes as well. I'll show you the Aussie. Just quickly going back to Forex. Remember, with Australia, their most important trade partner is China. So we've seen the Aussie be one of the underperformers this morning in currency markets. I can show you that if I just show you the G10. Yeah, you can see the Aussie's the worst performer here. The Kiwi also doing pretty badly. The Loonie doing badly as well, mostly because of oil prices, that is. Remember, oil is one of Canada's biggest exports. And then you can see the dollar doing well, the yen also doing well, safe havens basically. But anyway, back to the charts. Let me show you US equities, which are a little bit lower, but actually holding up pretty well. And I think one of the things that you got to remember with equities is when there are concerns, which there still are, about the Fed and other major central banks being hawkish, bad news regarding the economy can actually be taken as good news because, you know, if this weakness in Chinese data does come to US shores and does worsen the economic situation in the US, well, then that would potentially mean that the Fed is going to be not as aggressive in the next couple of meetings and in 2023. So that idea potentially given a bit of a floor to the S&P 500. You can see the index future is only about 0.5% lower in pre-market trade, still trading near its highest levels since early May. So yeah, just something to bear in mind as we proceed with the week. Speaking of, let's go through the calendar, talk about some of the key events we've got coming up this week. RBA minutes. Obviously, the Aussie's in focus, as I've just been showing you, with these big China-related losses on Monday. But we'll be refocusing on domestic monetary policy there. That's the early part of the Asia session on Tuesday. Canada CPI. So that means people will be thinking about the Bank of Canada and what they're going to be doing at upcoming meetings. That could trigger a little bit of a volatility. Then back to Australia, wage price index. This is a really important one because the RBA does monitor very closely indicators of wage growth in Australia. Obviously, wage growth accelerating can be a precursor for inflation. So if these numbers, come out much stronger than expected, then that could give the Aussie a bit of respite, which it obviously needs at the moment. Now it's getting battered by all these China concerns. But on the other side of the coin, if this data is bad or softer than expected, then it could make things worse for the Aussie. So yeah, a couple of things to be keeping an eye on with the Aussie and the Loonie, and then the RBNZ as well. You're going to have to be watching the Kiwi too. They're expected to raise interest rates by 50 basis points to 3%. The important thing will be their tone on further tightening, because in the past they've told us that they're going to take interest rates to like above 4%. But, you've got all these worries about a weakening global economy now. Are they going to sound as hawkish? We're going to have to wait and see. Wednesday, UK CPI. That's always interesting. Look, it looks like it's nearly going to hit 10% in July. It's expected the Bank of England anyway expects it to go up to about 13% when they lift the energy prices again in October. Main event of the week, though, is going to be, or the main two events of the week are going to be these two here: US retail sales and FOMC minutes. Obviously, the last Fed meeting was interpreted as slightly dovish leaning, and that helped support this rally in equities that we've seen in the last couple of weeks. So potentially we're going to be looking for a slightly dovish sounding FOMC minutes. Retail sales, obviously, the health of the US economy. We want to see further indications on that. Jobs market's been going well, according to the data we had a couple of weeks ago. The PMI data for July was strong. So how is the consumer doing in July? And it's not just retail sales data that we're getting out this week that's going to inform us on the health of the US consumer. We've also got earnings from some of the big retailers like Walmart and Target and Home Depot. So retail in the US is going to be a big theme this week. And then the rest of the week, a little bit less exciting, to be honest. Well, actually, no, look, we got more Aussie data, employment data. So really, really important week for the Australian dollar this week. But yeah, as you get into Thursday, things sort of calm down a little bit. Not really any massive data. Philly Fed in the US unemployment claims, bit of Fed speak potentially. And then on Friday, we've got retail sales from the UK and Canada, which could trigger a little bit of volatility for the pound and for the loonie. But yeah, calmer end to the week. But yeah, guys, hope you enjoyed the video, and I will see you all in the next one.